Hi guys, today I'm going to be talking about financial statements and a few things that I see when I'm doing bookkeeping, a few mistakes to avoid, as well as just some general tips around preparing your financial statements and things to look for in your financial statements. So a lot of you probably know this, but the three key financial statements that businesses use are the profit and loss, the balance sheet, and the statement of cash flows. And so the profit and loss is also known as an income statement, and it obviously reflects your income and then your expenses. So here is an example of a profit and loss or an income statement. And so here you have your income, you'll have your cost of goods sold, your gross profit, and then your other operating expenses. You may have other expenses and then your net income. So the key here is you want to get this net income number right here. So this is, and I'll circle back to this, but this report, you can also find this in QuickBooks or in whatever accounting system you're using. So the other financial statement that most businesses use is the balance sheet. So you have your assets, your liabilities, and equity. The simple accounting rule is your liabilities and your equity should equal your assets. So that's a quick check that you can always do to make sure that your balance sheet is in check. So here is an example of a balance sheet. So like I said, you'll have assets, cash, accounts receivable, prepaid expenses, if you have inventory, your liabilities, so accounts payable, accrued expenses, any long-term debt, and then your shareholders' equity. So again, like I said, your assets here, this number should match this total number of liabilities plus shareholders' equity. So a common thing that I see with when I'm reviewing people's books or keeping their books for them is sometimes people will include their income here in their assets on their balance sheet. Again, we don't want to be doing that. We just want to account for the cash, your actual checking and savings balance. Another issue I see is if we go back to the profit and loss, sometimes people will include their total debt payment. So say they're paying their loans, they will include the individual loan and what the total payoff amount or what the total payment is for that loan and their expenses. So on your profit and loss, that's not accurate. You should only be including the interest portion or the interest expense of that loan. So again, within expenses on your profit and loss for your loans or your debt, you only want to include the interest expense, not the full payment or the principal amount. Your balance of your loans are going to come into whatever the current balance is, that's going to come under liabilities. So that's a quick tip I have. Another common mistake that people make is they will include, if they do have a line of credit, they will include that on their profit and loss under income. So even though you have a line of credit or you have a loan and you're drawing money from that, that's still not technically income. And so you should not be reflecting that as income in your profit and loss. It comes down to how you're entering it into QuickBooks or whatever accounting system you're using. You want to make sure that you are accounting for that correctly. And so you'll want to look back at pull your financial statements, pull these reports, which I'll show you how to do. You'll want to make sure that you pull up these reports to make sure that you're not accounting for it incorrectly. So for your balance sheet, like I said, the total loan balance should be listed under liabilities. So why does this matter? If you ever want to get an operating line of credit or you do want to get a loan and you go to a bank, they're going to ask for your financial statements. And so oftentimes when I talk to lenders, they get really frustrated because business owners are not giving them accurate financial statements. So it's really hard for them to make the decision on whether to lend money to you if you don't have good numbers and if your accounting is all over the place. As you know, when you go to file your taxes, your CPA will probably just ask for a profit and loss. And so again, you want to make sure that you're not duplicating expenses, but that also that you're giving them an accurate picture and an accurate income amount. And, you know, I hope that you have a good CPA and a good lender, but sometimes they're not willing to, they're just going to take whatever you give them, and they're not really going to do any checks and balances to make sure that the numbers that you gave them were accurate. And so that could dramatically impact whether you're able to get a loan, or it's going to impact the amount that you file for taxes and whether you have to pay in or not pay in. So it is important. Okay, so the other financial statement that I mentioned was the statement of cash flows. This is just reflecting your, usually it's divided up into operating, investing, or financing. And so there's an indirect method and a direct method, but I won't get into that and how you prepare it. But essentially, it's reflecting all of the inflows and outflows of cash over whatever time period you're showing. And so, again, your cash, this is a good check. It should, it's going to go into your balance sheet. And then, yeah, so right here, so whatever your cash balance is. So all three of these statements, you want to be comparing them, and there should be a few checkpoints and a few matches to make sure that everything is in check. More advanced businesses definitely use the statement of cash flows. I would say solopreneurs and very small businesses don't use this very often, and you don't necessarily need to send it to a lender or to a CPA. So a lot of times people just forget about this, but if you're ever going to merge or acquire a business, this is something that people are going to look at. And with all of your financial statements, there are certain key metrics or ratios that an investor or someone who's looking to buy your company that they're going to look at. A lender may look at those key metrics as well. So I'm not going to talk about that a whole lot. Okay, so first, I wanted to say that I know a lot of business owners, what I see is they're using QuickBooks online for their accounting system. And QuickBooks is a good route to go, a good tool to use. I also wanted to say Wave right here, like literally the spelling is how you would think it is. Wave does pretty much the same thing as QuickBooks, and it's free. So you can also pull reports. It links to your bank account. It categorizes your transactions for you. You can pull your financial statements. You can pay people. You can send invoices through it. It does a lot of the same things, and it's free. So, but because not a lot of people use that, I'm not really going to show that or go through it. So with QuickBooks, when you pull up your QuickBooks online, again, so desktop is going to be very different from this, but when you go to QuickBooks Online, you're going to have your dashboard come up, and then you're going to have reports over here on the side. And you may not have this favorites listed, but essentially you're going to have balance sheet detail and then profit and loss detail. I always think it's good to pull the detail. That's going to show you all of these underlying like subcategories within assets and then within income. I think that's important to show your lender and your CPA. So I prefer the detailed financial statements. But again, it's very easy to go in and pull that. However, what you'll want to look for are those things that I mentioned, and you'll probably want to look through your bookkeeping and make sure that everything is reconciled and that you don't have any expenses duplicated. Again, that you're only accounting for your interest expense within your profit and loss, and things like that. So I would say those are a few of the key things to keep in mind. Other things that may be helpful for you, I know a lot of banks do categorize this for you. If you're using an accounting system, you probably don't use your bank's tool that categorizes your expenses. QuickBooks and Wave and a lot of the accounting tools out there do sync up to your bank account, so I recommend doing that. Other things that I've mentioned in the past that I just want to highlight again are different ways to save money. So for me, I prefer to bank through a credit union. So keep your personal account, your personal banking separate, have a separate account for that, and then for your business. It's just easier to, like, obviously when you're going in here and pulling your financial reports and you're syncing your bank account to QuickBooks, it's so much easier when it's just clean and it's separate accounts. So that's step number one, make sure you separate your bank accounts. But then two, if you're looking for a business account, that's where I was saying I do prefer to just use a credit union. I get a 2% interest rate on my checking account within business. And so that's pretty easy to achieve. So I just want to say that there are a lot of options out there with credit unions to get a good interest rate on your checking account within business. So that's one way to make money. Another way to save money is, again, credit unions and banks do have options where they will set up an ACH for you. So if you're using PayPal or if your website is set up to accept credit card payments, there's a guarantee that you are paying a transaction fee for that. So it could be anywhere between 2 and 3%. It's probably closer to 3%. That's what PayPal is, and that's what most like Square and a lot of the major credit card processing companies, that's what they're charging. And so one way to get around that is, if you can, set up an ACH directly through your bank, or Venmo. I know if you're like a larger business, you probably don't want to be using Venmo, but for solopreneurs and other folks, Venmo has a very cheap fee. I think it's 0.25%. So compared to 3% for PayPal, that's a pretty cheap transaction fee. But you can also, depends on your bank or your credit union, but you could also just set up a way where they can mail a check to you. So then they're not paying for the stamp. There are just lots of options. So I just want to highlight those, a few creative ways to help save money. I believe Shopify, if you are selling like a lot of products, Shopify is probably, I've heard that is the cheapest, going to have the cheapest e-commerce platform. So if you're selling a lot of products and you want a lower transaction fee, then you might want to look into that. So those are just a few ways to, kind of help you understand your financials and refer to your financials and be able to make decisions in your business. And obviously you always want to be comparing. I prefer to reconcile my transactions monthly, and then I look at my financial statements monthly as well. But I would say definitely be looking at it quarterly at least, and comparing quarter to quarter and then year to year. So look to see, like, okay, line these up and see how are things moving, what are some of the major expenses, what are some things that we can cut. I know I've shared different ways to save money before, but just very simple, easy, low-hanging fruit is look at any subscriptions, any professional services. Like, did you sign up for a subscription that you're not even using? Can you cancel any of that? I mentioned the credit card transactions and trying to save money on that, but those are just a few ways to low-hanging fruit that could, depending on the subscription, it could save you a lot of money. So I hope that helps. If you have any questions, let me know. But that's all I have for today. Have a great day.